Hello, everybody. Welcome to the Fundamental Analysis webinar. Sorry, we got a few minutes late start, just a technical glitch getting things up and running. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, thank you. I've got enough responses. Thank you very much. So as we move forward, there's obviously some things going on fundamentally that we're all aware of, and we'll take a look at some of the latest headlines, and then we'll take things to the charts. Now, today will be a little bit of an abbreviated version, simply because a lot of the assets aren't running, given that it's Easter weekend coming in, and a lot of the assets are on a non-trading day right now in terms of stocks and indices and such. But we'll take a look at some of the currency pairings and apply that to the fundamentals a bit, and we can talk about some of the other assets as well in terms of a plan for going into next week and what you might expect to be happening based on the fundamental news. So let's go ahead and move forward. Keep in mind, as always, no one trade is guaranteed to profit. Obviously, all investments have a level of risk to them. Trading CFDs, spread betting, options, it's the same. There's obviously risk involved. Now, keep in mind, we're all here because there's obviously some nice potential for profits as well, and that's what we'll be looking to try and help out with some information and some strategy concepts to hopefully add to your trading strategy or help to build a new trading strategy if that's the direction you're going. So, and if we have time, we'll take a look at the AvaTrade Go app, which has a nice feature for managing risk called AvaProtect, which helps you protect against losses on gold and silver and FX pairing trades. So it's a nice feature. If you haven't seen it, maybe we'll take a quick look at it. Now, fundamental news, basically, we can break it down into two types. Regular economic events, and we'll take a look at an economic schedule. It's probably pretty empty today, given that it's a holiday day today. But there are events scheduled, whether they're factory production numbers, PPI numbers, unemployment rate numbers, etc. These sorts of regular economic events are scheduled. We know exactly the time and the country it will apply to and the currency it might affect. And we can plan for those very easily timing-wise. In terms of other types of fundamental news, the type we call extraordinary economic events, those are a little harder to plan for in terms of the timing or the scope, but you still, within your strategy, can account for unexpected news that could break at any time. And so we'll talk about how you can plan for that as well, with a combination of market moves and or pending orders that can back you up for the unexpected news that you just don't know could happen at any time. Justine, welcome. You're saying you're here from South Africa. That's nice. Elvis, welcome. Elvis is in the building, I guess, is the phrase. You're asking, how do you trade without a broker? That might be difficult. I'm not sure what direction you'd be going with that. Obviously, a lot of folks have retirement accounts, that sort of thing, where they're buying stocks and things like that for longer term investing. But you can't short those, really. If you want to do the style of trading we're going to look at today, you'd want a broker account with like a retail broker like AvaTrade. Okay. All right. So let's move on then. Let's take a look at some of this fundamental news, see what's happening around the world. I use a couple main news sites. You can use any ones that you trust, really. And as we take a look, we can see, on headlines here, on Russian border, China scrambles to contain coronavirus influx. Okay, so the whole idea that China had the virus under control, they were ready to open up their economy, looked like things were headed in the right direction, and maybe they still are, but headlines like this can cause some fear to come back into the markets. Okay, I know there's been a lot of recovery with many of the indices around the world, the DAX, the Nikkei, the S&P, the Dow, etc. But it only takes a little bit of fear to bring out the bears, right? A bear market is obviously bearish conditions cause assets a lot of times to go down in value, to sell off. And so this sort of headline, China scrambles to contain coronavirus influx, that might spook people a little bit, considering China's the #2 economy in the world in terms of the amount of products and effect they have on global economy, and U.S. being the #1 and also having a pandemic issue. So still plenty of fear out there to cause these big swings to continue to occur potentially in the markets. And then we're looking at global output cuts held hostage to standoff. Sounds like there's not a deal on oil yet. Okay, so it wasn't but a few days back when Trump said, "Hey, we're going to have a deal. I'm brokering a deal between the OPEC nations and Russia," and oil shot up from low 20s to about 30 a barrel, and everyone was happy. And then all of a sudden, an opposite headline. We see oil has pushed back down. So we'll take a look at that as well. Obviously, these are fundamental stories driving these movements on the chart. There's no other way to look at it. The fundamental news is helping to cause these huge swings on the charts. Technical traders can still take advantage of it, even if you're not looking at what the fundamental news was. But I think it's helpful sometimes to know what the fundamental news was and then do your technical analysis, which is the whole point of this webinar. Hello, Hector, and welcome. Hector's here from Botswana. Nice to have you at the webinar. Okay, so let's then take a look at another news site and see what the headlines are. We can go to investing.com. Trump urges Congress to approve small business funding with no add-ons. I don't know if you understand how things work, at least in the U.S. Congress, but when one political side, and there are two sides in the U.S., the Democrats and the Republicans, or referred to as the left and the right. Trump being a Republican president, of course, the Democrats try and stop everything positive that he could do that might help his reelection chances, even sometimes if that means holding up funding for small businesses. They got the first large package through with a lot of resistance on different parts from one side to the other, bickering back and forth, but they got that $2 trillion plus stimulus package through, and the markets responded positively to that. Now, Trump wants to add more for small businesses because he sees it's working well, and there are lots of small business loans going out to keep them paying their employees even while they're out. Hello, Charlie. Welcome from Ireland. And we've got someone here from Ghana. We've got all around the world. That's good to see. All right, so Trump's trying to get more through because he sees the positive effect it's had on the markets, and he thinks it's going to be very beneficial, obviously, for these businesses, for the people working for the businesses, and probably also for his reelection chances, right? You can't separate politics from anything, even during a pandemic. And what do the Democrats do right away? They say, no, not unless you do this for us and that for us also. And so they're trying to put add-ons. Right? This is what they did with the first package that went through. They wanted to fund more money for a museum, more money for a learning arts center, more money for green energy, all these things that had nothing to do with the coronavirus and helping people who were losing their jobs. But they wanted to use the opportunity to try and get things through that they couldn't otherwise get passed through Congress. So you get this bickering back and forth. And so part of maybe some of the bearish momentum, if there's any building, could be that Trump wanted to get more money through and he's receiving resistance somewhat. They're not just all jumping on board. So that's something to view, but in general, that's viewed as positive. More money coming maybe for small businesses. And we can see that the futures, well, these are old numbers. These are not today. But we can see what they were doing yesterday as some talk about this occurred. The futures were green and the market was green, and they really liked the idea. Now, if through the weekend, and if the indices and the stocks are not open for trading today, if through the weekend you see bad headlines about maybe they're not going to get a deal and there's resistance to more money for small businesses, you could see negative movement then on Monday. Okay, it's a definite possibility. So you want to pay attention through today, Saturday and Sunday, before the markets open as what's happening with those negotiations. Is there positive headlines or negative? What's the sentiment? Then you'll get an idea of, once the markets open, which way they might gap and which way maybe you'd want to trade, either with the momentum or against. Okay. So very important to pay attention to the fundamentals. Now, you could look at the economic calendar, which is found here on this website, and there are lots of locations where you can look at economic calendars. And we take a look at what's come in today, and we see some positive news out of China. Green, 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 green. Okay, that goes a long ways. New loans, of course, new loans are up, right? The government is issuing money to try and prop up the economy. So new loans are up. Money stock is up. Social financing is up. That makes sense, right? Social financing up during time of economic crisis. So these numbers, while better than expected and usually positive for the economy, for the markets, are maybe not so unexpected, right? But they did come in larger than the anticipation. So that's something to take a look at. That could create some positive momentum coming out of the weekend, or any assets that might be open today still to trade on. Okay. Willie, welcome. Good to have you as well. Yeah, Hector, you should be seeing my screen. Type OK if you all are seeing investing.com that I'm pointing at right now. Okay, thank you. I've got enough responses. So Hector, it's just you. Somehow you don't have the screen showing. You've got to check how you've got yourself set up, okay? All right, so we get the idea, some general things. There are some announcements coming here out of the US in 12 minutes, okay? We'll see whether these are positive or negative in a little bit, and they certainly will have an effect on the movements on the charts, okay? So we'll see the charts start to move as we're looking at it here in 10 minutes or so. Let me refresh this screen, see what the time is. I think it refreshes itself. So yeah, 12 minutes. We've got some large announcements coming, CPI numbers coming in that will be interesting to look at. Could be really bad because of the shutdown for the past month. It's the consumer pricing index, but not necessarily. Prices haven't necessarily dropped yet, okay? All right, so let's take a look at the charts. Now that we've got an idea of the fundamental situation, let me remove some of these lines from this chart. And so this is the USD Canadian. And then let's also look at oil for a second. Okay, we see oil pulled back down. All right, now not moving today. Let me take a look here. Okay, you see the 9th was the last candle there, and today being the 10th. So this move down is paused now because the oil's not trading today. It'll trade on Monday, once the markets open Sunday night, Monday, because of the holiday weekend. Now, Dion, you're saying shocking move down for oil, move from oil, to be honest. Dion, are you saying shocking that it came back down or that it went up so far? I'm curious what you mean by shocking move. You know, we looked at a headline that it came back down. Well, the problem is, if you look at the headlines, the fundamental news, the headline we just looked at, they don't have a deal. They don't have a deal completely in place to cut all this production, and there's some waffling back and forth whether, I think the US is resisting having any cuts, and the whole thing could blow up, you know, and that's the fear, and that can help drive oil prices back down like it did. So it's all sentiment driven right now. When oil shot up from low 20s back here, okay, earlier in the week, and shot up to 30 a barrel almost, what caused that? Was it because there was actually a decrease in supply causing the price to go up? No, there was no decrease. It was all sentiment driven, meaning people liked the idea that, hey, there's going maybe to be some cuts. So then they start buying oil thinking that the price should go up simply because there's going to be cuts. So the fact is that there's still an oversupply of oil in the world. Nobody really cut production yet, right? And at the same time, there's still a global pandemic and fears of a global recession. So the short-lived excitement that caused oil to shoot up to 30 a barrel or so, I think it was pretty obvious that it might pull back down with any fear that would come back. Okay. And if anyone thought that the OPEC nations and the US and Russia would just sit down and say, hey, kumbaya, we all agree, let's all do what's best for each other. If anyone thought that that was going to happen, good for them for being so positive minded. But I had my doubts that a broker deal would just go so smoothly. Okay. Yeah, listen, yeah, Adam, you're saying given the shortage for storage, oil production has to come down. Or Adam, they have to build more storage facilities. The question is, which is going to cost them more? And there's been some theories out there that oil could actually go to a negative price. I'm not saying it's realistic that it's going to happen, but the explanation from this analyst was if the amount that they're getting by selling oil is less than it costs to build new storage facilities, then actually the price could go negative, below zero per barrel. So some interesting theories out there, but the point is there's such an oversupply of oil, even with some production cuts, it might not be enough until the global economy turns back around. Okay, so it's a lot of bearish pressure on oil for sure. And these talks about cutting production, it can help. Certainly it can help. And they better go big if they think it's really going to sustain the price of oil up in terms of how much production is cut. And if you can't get buy-in from the OPEC nations and Russia and the US, I'm not sure how much effect it can really have. So without the economy turning around a bit. Yeah, exactly, Dion. That's what I'm saying. What really will drive oil prices up in a more sustained way is not just production cuts, but that combined with this virus pandemic being under control and economies starting to open back up in a large way. That will really help stimulate a more sustained bullish momentum for oil as not only production cuts occur, but demand starts to actually rise. All right, so so this is the situation with oil. I see a support level right where this started to or stopped dropping. Okay, here was the resistance here. You see it on the chart. That was at $22.50 per barrel. Resistance. This breakthrough was when the news came out. Okay, this is a breakthrough candle. That was when they said, wow, production cuts coming that could be 10, 15% across the board production cuts. If that was this excitement, it took that type of news to create this bullish breakthrough candle. Okay, and then it just kept climbing until it didn't, until the excitement wore off and the realization of, okay, there actually has to be a deal now. Once that realization came in, you had a gap down, a refilling of the gap, which many times occurs, and then a continued movement down with the obvious bearish momentum on that gap down. Okay. And by the way, that's a nice trading strategy. From Friday's close here to Monday's open, it gapped down. Okay. That tells you negative momentum. Now, if it starts to reach high points higher than where it opened, that's an uptrend. A technical strategy is to trade to refill the gap from Friday's price to Sunday night / Monday morning's open. You see it refilled the gap. So gap traders with this strategy from Friday to Monday is when you best can use this strategy. As soon as it started to refill the gap, you go with it, have your stop loss just below the open price. So you're not risking much. And that uptrend continued and filled almost the entire gap. Okay, came all the way up nearly to the full gap, the closing price on Friday. Okay, very easy strategy to work out. You look at the technicals. If it's starting to uptrend into the gap, many times once it re-enters the gap, it will fill nearly the entire gap or most of the gap. And it did that in this case. Then this would be resistance. Friday's price, where it gapped down from, would be natural resistance. So once it got near that price, that's the spot to take a shot at selling, okay, with your stop loss just above Friday's close, okay? And you see both of those strategies would have worked very well. And again, this is fundamentally driven. The gap down, fundamentally driven with negative news through the weekend, last weekend. And then once it returns to that resistance, this is a technical strategy to trade down in the direction that the opening momentum showed you existed. Okay, so very, very useful strategy. Now what we see is it's dropped all the way down to the old area where this whole story began with possible production cuts. That's where it was when the story broke, down here. So now it's returned to that spot. Did anybody say, hey, there aren't going to be any production cuts? Forget it. No, that didn't happen, right? There might be some bickering about it, but the hope is still there that there's going to be a deal for production cuts. So what makes sense off this support level where it broke through? It would take just as strong of a momentum in the opposite direction to break below the support, right? So you could prepare a sell stop below 22.5 somewhere, a sell stop pending order to sell if it breaks that support. Meaning if horrible news comes out, Russia's off board, they're not going to do production cuts, OPEC says they're going to up production as a retaliation. If anything like that happened, what do you think would happen to this breakthrough level on the way down? Right? It might break through back down, right? And so you can prepare it. Remember I said there's two types of fundamental news. The known in terms of scheduled announcements and that sort of thing, and the unknown in terms of extraordinary fundamental news that you don't know what it will be or when it will be. So you can prepare for the unknown story that could come at any time that could be really negative for oil by putting a sell stop below this support level. Why this price is important? Why would you have your sell stop below that price to take a shot at a drop? Because that's the spot where it took huge news to break above. So in the reverse idea, you would think it would take huge news to break below. And look, you see it tested it. And at that exact location, it's not a coincidence. Look where this wick stopped dropping, exactly where this breakthrough occurred. That's exactly where you would expect this drop to pause, okay, technically speaking. So preparing for an unknown possible negative fundamental story for oil, sell stop down here somewhere, entry point somewhere below that support level, somewhere down there, 22.2 or 22.1 or something like that, okay? And then a natural spot to put your stop loss would be back above that, right? When this broke through, if your stop loss was back below the support, it never went back to test it, and it kept climbing. Same thing, if it breaks through on the way down, you could have a sell stop with a stop loss back above that mark, and if it's the same type of momentum, it would just keep dropping and not come back to hit your stop loss, okay? So you're using the historical movement to say what's possible for future movement. Not what's guaranteed, but what's possible, right? So sell stop makes sense to me to prepare one, okay? For the potential negative news story that could break that support. Okay, what about buying up off the support? Why not, right? Why not? Now, if oil was live right now, you could buy off the support. Now, because it's not going to open again till Sunday, right? Sunday night, you can't get the trade in now. Yeah, Julian, this is the MetaTrader 4 platform. It is. So you could buy up off of this support level once the market opens, but what's probably going to happen when the market opens is you're going to see a gap in the oil price. If it does have a significant gap in the price, okay, you could think about it like we looked at here. Last weekend, from Friday's close to Monday's open, Sunday night / Monday's open, You see it gap down, refilled the gap, and then continued in the direction of the gap, which makes sense. The reason it gapped down was because there was negative news on oil. It gaps down and then pulls back up and then continues in that direction all through the week, right? So watch the open on Sunday night / Monday morning, depending on your time zone. And if you see it gap below this support and then pull back up to it, then you could think of this as resistance again. If you see this gap up towards this resistance, you could think of that as resistance and think about whether you'd want to play a move back down. So you have to watch the open now, but you see what happened last week, and you see how easy it was to predict the refilling of the gap that potentially occurs many times, and also the direction of the continued movement through the week in the direction that it had gapped at the opening of the week. Okay, many times this is what you see. So again, watch the open. You know you have a major price level here. It's going to determine the direction of momentum and sentiment as to whether it opens by bouncing up off that support or does it open by breaking the support, in which case you know which way the sentiment must be going. Okay. I'm looking at 1 hour candles right now because I wanted to show you the whole week's worth of movement, Justine. So we're looking at a week-long perspective of movement so that we could see the gap from last week when it opened this week. And then we can talk about the price level, the support level here from earlier last week where it broke through. And now we can see that it's on that support level. You need that bigger picture view to understand where those price levels are. Now, if the market was running right now and you're trying to get a sense for what exact spot do I want to enter a trade, then you could zoom in on the 5-minute candles, even the 1-minute candles. Very good question, Justine. So it's called taking an outside in look. Look at the bigger candles, get an idea of the bigger picture and the trends and the movements like we just looked at, and then take an inside look on the smaller candles, 15-minute, 5-minute, etc., to find more precisely where you'd like to enter. Okay, good question. Now let's take a look at gold. Okay, very interesting what happened with gold. Lately, gold's been rising with good economic news, which is the opposite of what's usual during normal times, and dropping with bad economic news. And you think, why is gold dropping? It's a safe haven. When there's bad news, people should be buying it. It should be going up. And when there's good news, gold should be dropping. And that's in a normal market, that's what usually occurs. But because there's a global pandemic and the fear level is so high, when there's bad economic news right now, it's really bad news. And people are so fearful that they're cashing in gold so that they have cash in hand. Because you can't prop up your country or go pay your mortgage with a gold bar. You actually need the money in your hands. So the gold has been liquidated quite a bit when there are negative stories because people want cash on hand. Yeah, you could say inverse to the dollar, but there's more to it than that as well, because there are many times where the dollar is strengthening, but gold is still rising, and vice versa. There are many times where the dollar is weakening, maybe from a lowered interest rate, but gold comes down because that's good for the markets with the lower interest rate. So it's not always inversely correlated with the USD. But yeah, right now, the US dollar has become somewhat of a safe haven for people who are liquidating gold. Okay, people buy gold as a safe haven for when they think really bad times might come, so they have something of value. Well, guess what? That really bad time has come, a global pandemic, and so with worse and worse news, people were selling gold, not buying it, because this is why they bought gold in the first place. So they had something after the stock market crashed, which it did, indices crashed, etc. What did they have left to get cash from? Their gold. Now was the time to cash it in. The global pandemic had hit, right? The potential economic collapse had hit. So they wanted their cash. Both government entities, business entities, personal gold investors were cashing in their gold for currency. And which currency do people trust all around the world? The US dollar. So during this time of crisis, even when the US lowered interest rates to 0, which usually would weaken a currency. Okay, lower interest rates usually weaken a currency. The US lowered their interest rate all the way down to 0, and the strength of the USD went up. That tells you these are not normal times. Gold was being sold when fear was the highest, which seems backwards. Fear usually drives people to buy gold, but it's because fear was so high, it was fear of a total collapse of economic systems. And so gold investors wanted to liquidate the gold and have cash in hand. And which cash did they trust the most? The US. So the US dollar was strengthening as an index, as a basket against other currencies, was strengthening. Okay. This was the relationship that has been going on these past couple months. Gold going up as the indices and stocks are rising, because people have confidence, at least, that there's not going to be a total collapse if the market's improving some. And so they're buying gold back because they feel that there will be a global recession in the minds of many people. So they want to buy gold with the good news because they're more confident they don't need their cash in hand. And but they're still confident that there'll be global recession and that gold will go even higher, if that makes sense to anybody. So as you see, gold was going up. Guess what looked exactly the same? Let me show you. Let me bring in NASDAQ. Okay, and let's go to 1 hour candles. As gold was going up here, up, 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 and over, look what else was going up. NASDAQ, up, 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 and over. Okay, so rose and found resistance. Gold rose up and found resistance. Different shape curve, right? But same direction. And we could look at Dow Jones, similar, right? Gold starts climbing here straight up, has some hesitation, goes sideways. Dow Jones straight up, has some hesitation, and starts going sideways. Okay, so those movements have been mirroring each other when usually they were inverse. Meaning usually when markets were good and a major index like the Dow Jones was climbing, usually people were selling off gold, and it would be flipped, and you'd see this going down and finding support as this went up and found resistance. Now they're moving together. Good news, gold is climbing with the indices. It's just something that has been happening since this pandemic spread and the fear got so high. Okay, good. Again, the thinking, and I've read this from multiple analysts, the thinking is as markets are climbing, then there's less fear that these gold investors have less fear that they have to have their cash in their hand. And so then they're buying the gold back, expecting that gold won't just go to 1,600, 1,700, but maybe they expect it to go to 1,800 or 2,000. Okay, and I'm not here to say that it will, but nobody would buy gold at these prices unless they expected it to go higher, right? Why else would you buy it at that price? So as the markets are going up, they're buying gold because they think that it's safe enough to get the cash out of their hands and hold gold for the bigger picture recession that they think is coming, which then would drive gold up further. Okay. Dion, the expectation, you're asking that now that we're in the second quarter, does that change anything? The expectation, all of the economies that were shut down so much, China, US, European nations, certainly Italy, Spain, UK, all of these countries are expecting really bad economic numbers in the second quarter. As we start looking at GDP, factory production numbers, jobs numbers, etc. Maybe if the rehiring starts, the jobs numbers might start to look better. But certainly all these numbers where you're looking back at the past months, this quarter to have new numbers come out, they're expected probably to be somewhat ugly. Okay. Now we saw some positive numbers from China, but that was for government assistance, for loans. All of those numbers looked pretty. They were green. We looked at them as we were getting started. But if you start to look at their actual activity, factory production, GDP numbers, all of that, they're expected maybe to be pretty bad through the second quarter. And that's why when there's good economic news and people feel safe enough to get back into buying gold, that's why they're buying gold even with good economic news right now, because people understand, investors understand that probably there's a lot of bad news coming this second quarter from factory numbers, production numbers, GDP numbers, etc., because of all the shutdowns. So if you feel that it's not a total collapse anymore and the Dow Jones went up in this example, then people feel it's safe to buy gold again and get the cash out of their hands. And they think it's a good idea because in the bigger picture, bad news is maybe coming with recession worries. And that these big gains up, maybe it will be short-lived. That's the idea in buying gold with the good news right now. That the second quarter, as you're mentioning, Dion, might be somewhat ugly. Okay, so, and we can look at the DAX. Looks the same. Who thought that the DAX and the Dow would mimic gold, or that gold would mimic them? But that's what's been occurring. If you saw a big crash on Monday of the indices, likely you'll see gold pull right back down as well. And what if you see one happen before the other? What if you see the indices gap way down and gold is hesitating for a while and the market opens? What might that clue you into as to what gold might do? Yeah, Justine, it only makes sense if we look at the past, not just this screenshot, right? But if we look at the past 2 months, gold's been following the indices and the indices have been following gold, which again is backwards thinking, but that's what's been happening during this global pandemic. And I've touched enough on the theory why. But the fact is that's what's been happening. So until that trend changes, you could try to take advantage of it. Okay. So let's say the indices gap down, gold is hesitating. You could put your stop loss above the resistance up here and go for a shot that gold would also follow the indices down, or the opposite. If gold gaps down and the indices didn't drop yet, you could take a shot with the indices. Okay. Either or. When you find relationships between different assets, it's called cross pair trading, cross asset trading. If one leads the other, you have a clue as to what the other one might do then if one takes off before the other one does. Okay, there are algorithms based on this. Okay, and many of them work very well. Ibrahim, the DAX, the Dow Jones, the NASDAQ, the S&P, they've all been moving very similar because these are global news stories driving the movement. Global news stories about oil, global news stories about the virus pandemic, etc. So as one goes, they all have been going lately. Yeah, Justine, I'm talking about auto trading with algorithms. You can program what they call an EA, an expert advisor. By the way, you can go to the MQL5 community and create a job order. You can tell them, hey, I'd like to have an auto trading EA for MT4 that will allow me to tell one asset to trade in a different direction. If another asset moves X distance, you can think of how you want them to program the inputs and they'll create it for you. And they're variable. You can enter any assets in it you want once you have it created. Okay. So it can be a very useful tool, especially if you're busy and you'd like to have the system trading for you based on your rules while you're at work, etc. Okay, program trade sizes, delays between trades, whatever you want. You just have to have the programmer create it for you. $30, $50 on MQL5 community, you can create a job order offering that amount, whatever amount you want to offer, but you'll have 12, 15 people within an hour. You'll have 12, 15 people saying, I'll do it for $40. I'll do it for 30. You'll have offers, and you can look at the history of how many customers have they had, what kind of feedback have they had? Are they 5-star, 4-star? Yeah, MQL5.com. It's a programmers community that's linked to MT4 and MT5 trading. The programmers there, you open a free account, you click on free market. Here, let me show you. I know we're going off track a little, but because a lot of the assets aren't moving today, this is probably helpful. Okay, here, let me pull this on the screen. Here's the MQL5 community, MQL5.com. Okay, And so you can create a free account. See here, it says create account. And then when you go to, once you have your account, you can load money onto your account here. You can go to freelance and you can do a lot of things. Create an order, okay? Just click create an order. You tell it, what do you want to do? What are you trying to make? Auto trader, whatever. Expert advisor. And you create a description of the job order of what you want, okay? And you can offer what you want to offer, okay? First time I ever created a job on this, I offered like $150 because I thought, well, this is going to take a lot of work for these guys. You have to understand they have templates saved for a lot of requests for a lot of jobs, and I wasn't thinking that way years ago. And so I said, wow, they have to do some real programming to create all the rules I want. And with like I said, within an hour, people were saying, I'll do it for 50, I'll do it for 40. I'm thinking, wow, I way overshot how much I was offering. And then once I accepted someone based on their history and how many late jobs or on-time jobs they did, whether they had complaints from past customers, you'll see it all from anyone who offers to do the job. And by the way, I have a favorite programmer now I use, and I use the same guy all the time. But I realized quick that you can get jobs done fast because they save templates. Once I uploaded the job and accepted their offer and everything, within 10 minutes they sent it back done. I said, oh wow, no wonder they're offering to do it for less. They already had this cross pairs idea programmed with the features I asked for, probably saved in their files. They just sent it to me, boom, done. But then I kept adding to it. I said, okay, I want to be able to tell it if it wins to wait 5 minutes before it trades again, right? And as you build it, you'll think of more rules. As you try your EA, you'll say, okay, maybe I want to be able to tell it to double up if I want to. And maybe you want to be able to have trade sizes that if it loses at 0.01, trade at 0.02. If it loses at 0.02, trade at 0.03. If it wins, go back to the beginning. You can think of any rules you want to be able to have into your EA. And so I probably have 25 rules on my one auto trader that I use for trading cross pairs trading, and I can tell it to do a lot of different things, okay? And it can be as complex as you want it to be. And you don't have to think of it all at once. You can go back and add more rules and ask the programmer, hey, can you also add this feature? No problem, they'll do it. $25 more, $35 more, done. They add another line of code and you've got another feature to add in as a rule in your EA, okay? So maybe we'll do a webinar sometime. I'll show you how to load the EA and do all of that. You have to think of the rules, Justine, like as if-then statements, and tell the programmer, I want it to do this. Yeah, you actually can connect one indice movement to another. You can connect oil movements to the Canadian dollar. You can do whatever you want. Absolutely. Once they create an EA that allows you to compare one asset's movement to another as part of a rule, like if gold goes up $5 in 1 hour, then buy on Dow Jones, or whatever rule you want to create. You can tell them you want to be able to do this sort of thing, and they'll leave it as a variable, meaning you can enter the what they call the related asset. You can put any asset you want as the related asset, and then as the traded asset, you can put any asset you want. It leaves it open as you're setting up the EA they created for you to put whatever numbers and asset names you want for it to trade on. So they're very flexible once they're created. They'll email you the code, the file for you to then paste into your demo account. Here, let me show you. Once you're in the demo account, right, or in your live account, I know why I said in your demo, in your MT4 account, I'm on a demo. You can be on your live account. But once you're here, if you want to paste an EA program, you simply go to Files, okay? You open Data folder. Okay, once the data folder's open, you go to MQL4. You go to Experts. You see here, there's a folder that says Experts. And you paste the file here. The EA that they created you paste it right here. Again, I'll back up. You click on File, Open Data folder. click on MQL4, click on experts, expert advisors, they're called, these auto traders. And then you paste the execution file that the programmer sent you after you had paid him to do it. And that's your file. He'll send you the source code too, which is needed to make changes to it. And then you paste the execution file here after you've put the numbers in that you want. Or actually you paste it here, then you put the numbers in. So you paste it. Then what you'd see once you log out and log back in, you see here it says expert advisors in your navigator. When you click on it, it would list your expert advisor because you just pasted it in. Then you drag, left click and drag it onto the chart you want it to trade on and let go, and it loads it on your chart. Very simple process. Perhaps I'll set up a webinar series just for EAs to show you guys. I'll maybe put mine on and show you, play around with it, show you how it works. Okay, so but it's a very nice feature for people who are too busy to trade on your own. Okay, it sounds like there's a lot of interest in that, so I'll talk to my the powers that be and see if we can set something up. I certainly can't give you my EA. It would be a conflict of interest, but I can show you how you can create your own, right? Like we just talked about. Okay. I can't recommend any third parties out there. We do have Zulu Trade and DupliTrade as options, which work with most of their systems with algorithms that trade for you. You can link through them. Yeah, the schedule, you can just use the links. They're always the same. The same links for fundamental webinar and technical analysis webinar. They're always Monday at 6 p.m. London time and Friday at 1 p.m. London time. Okay, same day and time each week, unless a holiday or something messes it up. Okay, you can ask your account manager for a link that it's always active. I add new dates and times to the same links all the time, so you don't need new links once you have them. Okay, so all right, that was interesting. We got a little sidetracked, but I think it's helpful because it really can help people out. It helps me out with my trading. So let's take a look then at maybe something that's moving today, the Australian dollar. Okay, and given that what economy is the Australian dollar linked to strongly? China, yeah, exactly. Tato, we have copy trading through DupliTrade and Zulu Trade. Okay, yeah, Justine, China is strongly linked to the strength of the Australian dollar because the #1 buyer of iron ore and coal out of Australia, and those are their #1 exports for their GDP. China's the #1 buyer. So a lot of times, as China goes, so goes the Australian dollar. Okay, and maybe the Australian economy as well. So with China coming out of the virus lockdown and things improving in China with factories opening up, it's no surprise that we look here on the 1-hour candles and what's been happening with the strength of the Australian dollar. Up. Okay, it's not a surprise at all. So we see that strong uptrend. If we go to 1-day candles, we can see this uptrend on the 1-day candles from down here up started when China started reporting that they had the virus under control. That fundamental news drove the markets up in terms of the strength of the Australian dollar. It was very obvious. So once you understood that relationship, if you then were looking for support levels to trade up from with the Australian dollar against the yen, and why against the yen? Because the yen's a safe haven and the yen should weaken when there's good economic news, as the Australian was strengthening. So you want to try and pair a strong horse against a weak horse as much as you can, fundamentally speaking. So fundamentals say yen should weaken with good economic news and the Australian dollar should strengthen. So that's why that would be a good pairing partner. So as we look at this climb, had you been only buying off support levels and not selling off of resistance levels, you'd have won a lot more than you lost. because the net effect was a lot more upward movement than down. And that was obvious that that was going to occur as China was coming out of its quarantine. Okay. And so now we've gotten to a point where you see on the 1-day candles, you see this gap right here. Let me get rid of the lines I drew. Okay. Let me draw the one horizontal line. Okay. This climb that just stopped right here, it was predictable. And this was, some of you were asking which candles should you look at, 5-minute, 1 hour, 4 hour, 1 day. This is why it helps to look at the bigger picture, even if you're trading on smaller candles, smaller movements, because this big rush upward, you see this wick right here at the top of this 1-day candle, it was obvious that there might be a delay and a pullback right at that spot, because look, this was a major price level where there was a gap down. So to get back above this, it has to retrace this gap. And so the news about China was good enough to come up to that gap, but not enough to break back through it. So it's going to take some other type of fundamental momentum to break this resistance level. So now let's zoom back in on maybe 1 hour candles. There we see this is the resistance level at that old gap from weeks back. Okay, so the fact that this hesitated at that spot makes sense. So if you anticipate there could be bad news out of China before good news, it makes sense to take a shot at selling from this resistance, because that's a major, major resistance level. It's a huge gap. Again, let's look, 1-day candles, gap down. The climb stopped right at that old gap. Some bad news caused it to go from here to here. It was something to do with them, with China shutting down their economy, etc. The spread of the virus, whatever it was big news. It wasn't enough positive news to break back above there. That'll be good for if someone's, Luai is telling us that Mexico's agreeing to cut production and that the U.S. would share in the production cut on oil. Okay, so maybe you look for a breakthrough, for a buy stop setup on oil. If that's breaking news, good news about more production cuts on oil, you could take a shot at a buy on oil, find a close support level to have your stop loss below in case it goes the wrong way. Always good to have breaking news during the webinar. Okay, so you see the resistance level. So you could have a buy stop above that resistance in case it enters the gap. Remember what happened before when we saw a movement enter a gap. It refilled the gap. So you could have a buy stop somewhere up here, that if the Australian dollar re-enters the gap from back here, that you buy on the movement. And currently you could be selling from this resistance down and have your stop loss above the resistance. You could take a shot at the pullback, and you could be prepared for the breakthrough. Again, preparing for potential unknown positive news with regards to China. Okay. Now, this oil news could be enough to create momentum to bring up the Australian as well. But let's take a look at oil before we end things. I think we'll stop here and let's look at oil to see if there's any response. Yeah, I don't see oil bouncing up yet, but Luai, if you feel like there's some positive news for oil, you could do a market buy, right? And your stop loss could be just below this low point, right? Here's the support level right now. So your stop loss could be below 22.50, right? Could be a different contract price. Jobis, you're asking why different closing price? Oil's traded on futures contracts. That's why there are rollover dates, and they're probably on a different futures contract. You can look on their website and ours and see which month's futures contract are on. The price movements will be the same, up at the same time, down at the same time, but the exact price can be different based on which futures contract you're trading on. Yeah. Luai, you're right. Oil's not jumping on our platform because it's closed. So probably with that news, there's going to be a gap, right? When the markets open Sunday night, Monday morning. So if that news is correct and there's development through the weekend that, hey, for sure there are production cuts coming with US and Mexico and Russia and OPEC nations all joining in. If that's true, right? You'll probably see a large gap up at the open when the market opens. There's nothing you can do about it if you don't have positions open yet, right? And then once that happens, you can look to see if it will retrace the gap. If it re-enters the gap, you can trade on the retracement. Again, if we look at 1 hour candles, that example was here. It gapped down and then retraced up before dropping further. So if Sunday night, the market opens with a gap up and then starts to drop, if it re-enters the gap, like this re-entered the gap going up, if it re-enters the gap going down, you can take a shot for it to refill the gap a certain distance. Or if it gaps up and comes back down to the support, then you can trade up from the support with the positive news. Okay, so pay attention to the fundamental momentum. I think we've all got an idea what that might be if these breaking news stories are true. Okay, let's take a look at, whoops, let me find the right part of, here we are. Let's look and see if there's a breaking news story here or on Reuters. Saudi, Russia seek to finalize oil cuts in G20 talks, want US involved. Okay, that doesn't sound like immediately. G20 talks. Let's see if they've got a date. We're looking. I don't see the G20 talks are coming up though soon. So just even if they haven't had the agreement yet, they started 15 minutes ago, but they continue through the weekend. Correct, Luai. So they continue not just for one day. So by Sunday night, we should have a good idea of the momentum. Okay, so very, very interesting news breaking as we're watching it. Let's look on Reuters. Nothing on Reuters yet. Okay, so good headlines to follow. You can try to apply the strategies we talked about as the G20 meetings go today and through the weekend. These agreements are negotiated and talked about. You'll have a good idea about sentiment and which way you might see a gap. And if there's a pullback after the gap, which way you'd prefer to trade. Okay. All right. Thanks everybody for joining. Any last comments, questions before we end? You're welcome, Luai, and also thank you for the breaking news information. That's always helpful during the webinar. It's why I always encourage everybody to participate in the chat. All right, everybody. Those of you celebrating Easter, have a happy Easter weekend, and to everybody, stay healthy with this virus, stay safe, and I'll be back at it Monday evening, 6 p.m. London time with Monday's webinar. All right, bye, everybody.